Hi, everybody. This is Hustle Hub. I'm Giacomo, and today we're with our special guest, Larry Chung. He runs his own channel, Larry Chung CFA, and he's also a contributor on Seeking. So please, Larry, introduce yourself. Let's tell us what you do and what you focus on.
Sure, absolutely. So thanks for having me. Just like Giacomo said, I run my own channel on YouTube, and you can find me via Larry Chung CFA. And on the channel, I mostly will discuss investments related to like tech stocks and the TMT sector, which stands for tech, media, and telecom. And I mostly cover fundamental analysis and talk about how to think about a company from various fundamental perspectives. And it's really important that I want to make this distinction that the channel is about fundamental analysis and not so much technical analysis, because technical analysis cannot really be relied upon when it comes to longer term investing. It's very helpful when it comes to understanding short term trading, but my channel is much more focused on understanding and picking big secular winners over time. So that's what my channel is mostly about. And I also am a contributor in Seeking Alpha, where the ideas that I express on YouTube, I cover them in much greater detail in my written research on Seeking Alpha. So outside of Seeking Alpha and outside of YouTube, I run an educational program that focuses on US college consulting and SATs. And in that program called Tiger Way, I help people understand the critical thinking that is required to succeed in the 21st century. And similar to what I do at Tiger Way, I do on YouTube, right? I show people these are the kinds of insights that you have to really dig through before you make like an actionable decision. Because if you don't think about all the areas and all the implications, sometimes people could make a investment decision that traps them in the position for quite a long time, leading them to a suboptimal like allocation.
Okay, perfect. So before we get into that, I want to start with your background. What did you study, where, and why it's so important to have the CFA in the financial sector?
That's a great question. So I went to Northeastern University here in Boston, Massachusetts for college. And at Northeastern, we had the co-op program. So we were allowed to do several 6-month internships across various companies and industries. And I did all my co-ops at PwC
Okay.
for PricewaterhouseCoopers. I worked in various departments there, audit, taxation, and also like their transaction services department. And after I graduated, I realized that accounting and the CPA track was not necessarily the track that I wanted to pursue long term. So I fell into the investing industry because I landed a job at a company named Sun Life Investment Management. And at the company where they focus primarily on fixed income public grade bonds, they wanted the analyst class to take the CFA exams. And so while I was in their rotational program, I took the CFA exams. I eventually passed all of them in 2018 and became a chartered financial analyst in 2018. And really, the CFA has helped my career out a lot. Number one, it leads in the short term to a lot of career opportunities in terms of promotions. A lot of companies here in asset management, you can't really get promoted without getting the CFA. It's possible, of course, but it's a lot harder. And also, besides promotions, if you want to find another job, the CFA allows you to become like a top priority candidate in the recruiting cycle, because they see that you have 4 years of investment work experience, which is required to
Mm-hmm.
the CFA. And then the CFA itself demonstrates your commitment to this industry. So promotions at work, finding new job opportunities, but really I would say the most valuable part is the knowledge and the commitment to continued learning, because the fact of the matter is no industry can really be compacted into just one exam, but this one exam does force us to become lifelong learners, and that is the most important part of the CFA program, because it sharpens up our skills, and it makes us, for example, continue to do quality research long after we have finished the test.
Okay. So, one question that I have is that in order to pass the CFA exam, it takes a lot of time. So, is it a good alternative to an MBA?
That's a great question, and I think a lot of people in like their early professional careers, they debate that, right? The CFA or the MBA or maybe both. And when I think about it, I think the true answer is if you have the opportunity to do both.
Okay.
I think that is the 21st century answer. I think having an MBA and going into finance is good. I think having the CFA alone for asset management is also good. I think to open up as many options and possibilities as possible, I believe that having both of them is is the right combination.
Okay. Okay. And is the level one CFA exam good enough to receive good opportunities in asset management?
Great question. I would say that if you have the CFA level one finished by the time you graduate college, it does give you a significant advantage in early stage career recruiting. I think that once you've worked for 2 to 3 years, CFA level one is less helpful. So I would say the sooner you have CFA level one finished, the more helpful it becomes.
Okay. And is the CFA useful in order to find jobs outside asset management, let's say in investment banking or private equity and so on?
That is a hotly debated question
Mhm.
where people wonder, is CFA as important outside of asset management, investment management? And in my opinion, it depends. I would say that if you have gotten the CFA, it does help in all industries because if we think about investment banking and we think about private equity, what is the nature of the work? Relationship management, right? It's about deal making.
Mhm.
And would you feel more comfortable with making deals with a chartered financial analyst or with someone who doesn't have that like background? Now, of course, if you have worked in banking your entire career and you have all those relationships, that's fantastic. But at the end of the day, uh, bulge bracket banks like Goldman Sachs, Morgan Stanley, JPM, they need to sell their work to other clients. And you sell your work better if you have a couple things: an MBA program from like a really prestigious school, or the CFA, or like I said, if you have both. So if we think about the highest levels of how banks deal with each other in terms of clients, the more credentials that you have, the more you're able to sell that kind of thought leadership because of that credibility.
Okay. Can you please break down more or less the costs of doing the CFA? And I know that maybe some company subsidize some costs of taking the exam, and how does that work?
Okay, right. So in terms of the cost of the program, this is what I remember. It could have changed, but this is what I
Mhm.
remember. When you first enter the CFA Institute, you need to pay like an initial registration fee. So that in itself is a cost. That might have been around anywhere between $700 to $1,000 based on what I remember. So that is
Okay.
just the entering the program. Then you
Mhm.
need to pay for the tests specifically, and each test is anywhere between $500 to $600 based
Okay.
on what I remember. And then you have to pay for the materials, which I would say is the most expensive part. The materials could be anywhere between $1,500 to $2,000 per level.
Okay.
So my employer at the time, they covered all of the like costs, so I was really fortunate. But I would say that to sum it up, you could probably finish the CFA program over several years for under $10,000.
Okay. And what is the return of having this certification? What are the entry level salaries increase? What is the entry level salary increase if you have the CFA compared to someone that doesn't have the CFA?
Yeah, that's a great question. So when people first enter finance, in asset management, investment management, when they graduate from undergrad, obviously salaries vary widely depending on the company. I think most people start off around that $75,000 to $90,000 USD salary per year. A lot of people start off in that range. And then, of course, there's annual bonus. Once you have the CFA, which takes about 4 years to complete.
What is the bonus like, more or less?
Right. So it really depends on the company,
Okay.
depending on which industry you're in. Like if you're in mutual funds, if you're in, for example, more aggressive like funds, the bonus tends to be higher depending on the performance of the fund
Okay.
that year. But I can give a range. It typically is anywhere between 15 and 100%.
Okay.
Yeah,
Okay.
15 and 100%. And as you can probably imagine, the higher end of that scale is awarded to more senior equity analysts, more senior investment professionals, and it's likely that the more senior staff have the CFA.
Giving your background, did you get a better understanding of how much it takes to go from entry-level analyst to portfolio manager in asset management?
Sure. Could you ask your question one more time? What is the question?
How much it takes more or less to go from analyst to portfolio manager?
Okay.
And does that differ if you have some certifications or not?
Okay. Sure. So in terms of timeline, I would say the timeline to portfolio manager varies. In fact, in investment management, it's a lot more about, I would say, strong research and talent than it is about time. In traditional industries like accounting or investment banking, you can progress to managing director after, for example, like achieving certain milestones. To become a portfolio manager, you tend to need to have strong performance and incredible insights into the market. So I would say typically if someone is really, really talented, I would say they could get to analyst from portfolio manager status in about a decade.
Okay.
Sometimes it could take about 15 years. But most of the time it's not about the time frame, it's about the performance and
Okay.
the market. So some people could work for decades and they might never make it.
Okay. Okay. Good. What are the main alternatives to the CFA if you want to work in asset management? And there are similar certifications for other, let's say, subsectors like investment banking or private equity and so on.
Right. So I would say there are two strong alternatives that come off the top of my head. Number one is the MBA.
Okay.
If you really don't want to take the CFA exams, the MBA program is a fantastic networking opportunity where people can, for example, like broaden out their business skills and also like sharpen up their network. And I would say that in terms of career progression, the MBA does have wider applications than the CFA. But it also, for example, is helpful in asset management, the MBA. Now, if someone does not want to go through an MBA program and does not want to go through the CFA program, I have the opinion, and this is not something that a lot of people think about. I believe the CPA is important too. I believe the CPA is important because at the end of the day, equity analysts need to be very strong in accounting. So, so equity analysts who have a really strong understanding of accounting and the intricacies of company reporting will have an edge when they invest. So if someone has a CPA in terms of academic pedigree, but they have the knowledge of a CFA in terms of investing, that makes a very powerful combination. And recruiters and employers know that.
Okay. 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 So let's have more, let's say, technical questions. Which databases did you have at college? Did you have a Bloomberg terminal? Did you have a Refinitiv? And how important is to start learning these things right at college, or is it something that you can learn by working when you start working?
Great question. I would say in college, you primarily have access to a couple of resources. One is Bloomberg, and the other is Microsoft Excel, right? I would say in general, Bloomberg can be learned like early in your career. Now, if you have deep exposure to it in college, that's fantastic exposure. But the most important area to really study well in college is Microsoft Excel. Because
Okay.
think about it this way, all the data from Bloomberg feeds into Microsoft Excel, and if you don't have a strong grasp of Microsoft Excel, learning Bloomberg is not as helpful. So I think of Excel as the foundation and Bloomberg as the way to deepen your expertise. So I would encourage your audience to really master Microsoft Excel, learn how
Okay.
to model, right? And then Bloomberg will make that process easier.
Okay. Okay. And one other thing is that did you have the opportunity to try other databases like Refinitiv, S&P, Capital IQ, FactSet, and so on?
I had access to CapIQ and FactSet once I started working, not in college.
Okay. And are they that different from Bloomberg?
I would say the interface is pretty different. The format and the way you like collect information is a little different. You have to be familiar with different, I guess, like interfaces. But the goal
Okay.
is all the same. The goal is to have more data, right? And if your goal is to have more data, all three resources are fantastic.
Okay. But is that something that if you know how to use Bloomberg, you don't need Refinitiv or FactSet and so on, or they are complementary, let's say?
I would say they're complementary because the way they the way they show information is different. So it's always better to know more and not just, for example, only bet on like knowing one platform, especially if you apply for a job at another company that doesn't have Bloomberg and only uses FactSet or the other software that you just mentioned.
Okay. And what are what which what are the things that, let's say, Bloomberg does best and FactSet does best? Can you break that down?
Sure. So I haven't used FactSet very much, so I might not be able to comment as much on FactSet. I could do a comparison between Bloomberg and CapIQ.
Okay.
So Bloomberg has real-time data. You can see all the breaking news, all the industry analysis, all live, and that live aspect is very important for sales and trading, which is why sales and trading departments use Bloomberg. I would say CapIQ is much more of a research analyst tool. It's much more of a modeling and an analyst tool to understand companies from the perspective of forecasting.
Okay.
So I would say Bloomberg, you could use it for equity research, but it's much more of a sales and trading tool, in my opinion. CapIQ
Okay.
is much more of a equity research tool.
So, if you had both, which type of analysis would you do on Bloomberg, and which one would you do on CapIQ?
Sure. So I would say Bloomberg is good for technical analysis. I,
Okay.
I would say Bloomberg is also pretty solid for understanding like how to source the API data into Excel
Hmm.
to so that when you open up Excel, you can constantly refresh models.
Okay.
I would say CapIQ, I would use it to build out the fundamentals of a company and and use it to track, for example, quarter over quarter performance.
Okay. Very insightful. Um, can you tell us a bit more about your working experiences and what you learned in every job you had?
Sure. So when I was an intern in college, I did various co-ops, aka internships, in audit, taxation, and like a group called transaction services. And that's very accounting oriented role, really building that knowledge to understand accounting deeply. And when I started full-time work at Sun Life Investment Management, that company was very focused on public fixed income, high grade bonds. So we can think about it this way: the largest companies in the world, blue chip companies, they issue bonds to
Hmm.
fuel their growth, to, for example, like fund their like research and development expenditures. And these bonds, because they're such high grade companies, they typically offer a yield that is not that much far above like a 10-year treasury or a 30-year treasury.
Yeah.
So
Of
a lot
course, they're all AAA, I guess.
very AAA, right? They're all investment grade.
Okay.
Yeah. So public fixed income at the company I worked at was very high grade. I would say like the lowest quality that typically the company would go would be about triple B plus. So
Okay.
that's in the lower end of the investment grade like spectrum. But anyway, a lot of my work consisted of understanding the issuances behind companies, why they issued at certain times, and the quality of that issuance,
Mhm.
and also the financial positioning of the companies issuing the bonds. So
Okay.
there's a significant amount of time spent on balance sheet analysis, and a lot of time spent on understanding whether cash flows would be able to service future debt.
Okay. 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 And another, let's say, technical question is, um, what are the other skills that you think will be required for asset management? I I heard some people that, for example, are studying Python in order to manage portfolios. And so, what are the skills and what you think are the new softwares that will be more and more used in this sector? For example, um, will there be an alternative to Excel, something like Tableau or something like that?
Great questions. I would say that Excel will most likely not go away. I would say Excel is most likely here to stay. It's too integrated into the workload of asset management and finance in general. So don't worry, Excel is here to stay. In
Okay.
terms of other skills that you could pick up, I do agree that knowing how to code is exceptionally valuable in finance going forward. Knowing how to automate using code and knowing how to scrape data using code
Mhm.
will be really valuable going forward. And I would say that any platforms like Tableau with data visualization types of like offers would be very helpful as well. Because at the end of the day, big picture, investing is about taking lots of scattered data points and putting it together so that we can make a decision that we feel comfortable with. And the only way to do that is to have like the right kind of information in front of us. Code helps with that, and also the data visualization platforms like Tableau helps with that.
Okay. Okay. Thank you. And another technical question that I have is, you had Bloomberg in your college, right?
Yes.
What are the informations that you have uh, with Bloomberg by having the Trade Desk subscription compared to the Bloomberg for Education subscription? What are the things that you had to learn on the job that you didn't have in college, let's say?
Okay, that makes sense. So when I was working at the company, I was I was in a division where I was actually doing trading for public fixed income.
Hmm.
And obviously, on that edition of Bloomberg, you have access to buying and selling like treasuries and
Okay.
also like public fixed income securities. And that option is not available on the student edition.
Okay, okay. Do you have any more insightful information on the capital flows going in and out of the company, let's say live, by seeing big trade blocks uh, of intraday trading? Is that something that you can see from Bloomberg?
So that's a question for someone who worked on sales and trading on like an equity desk. Because I worked
Okay,
in fixed income, I did not see that data flow.
okay, okay, okay. Um, so another thing that you do is you are a contributor on Seeking Alpha.
Mhm.
So how hard it is to become a contributor? What are the benefits that you have by being a contributor on such an important site for investors? And is that something that is turning useful for your YouTube channel?
Right. So I'm going to answer that in several parts because
Yeah,
that's
of
multiple
course.
parts. I would say Seeking Alpha is incredibly valuable, not just for my YouTube community and not just for my viewers, but also for my ongoing education as an independent equity research analyst. Right. So I think about my success, my future, for example, success on YouTube as a function of the quality of the insights that I say. If people find what I say insightful, then they naturally will follow what I have to say in the future. And I believe that people sometimes, if they want to read further of my thoughts, they have to go on a platform like Seeking Alpha to read my research. So in terms of how hard it is to become a contributor, I would say it works like this. I'll tell you how the process works. Every submission is reviewed by an editorial board at Seeking Alpha, and I have like submitted several articles. I plan to submit articles every 2 weeks or so based on my schedule because I have so many other items I have to manage. And I would say that they definitely do reject articles that are not high quality. So they do only accept high quality written research on the site, and they tend to ask for a lot of revisions if it doesn't meet their standards. And in terms of the benefits, I would say you have an option to keep your article exclusive on Seeking Alpha. In that case, they actually pay you for your research. You can also have it to be a non-exclusive article. In that case, you can use that article to put on your own personal blog to expand your audience, or you can put it on other, for example, like websites and syndicates and things like that. The biggest value of Seeking Alpha is not simply earning money from doing research there. The most important aspect of Seeking Alpha is building credibility. Because every article that you write, if you make a stock selection, Seeking Alpha will tell readers, were you bullish, were you or were you bearish, and at what price you recommended that company.
So is there something to have something like a track record of the contributors on Seeking Alpha in order to, let's say, take a look at their performance going backwards? Is there something like that so people can see actually how they would have done by following some contributor let's say ideas, investing ideas?
Yes. So Seeking Alpha itself, you have to follow like an author's individual articles and their specific views at that point in time. But there's a company called TipRanks, and maybe you've heard of it. TipRanks.
No, I haven't.
You haven't. So TipRanks is exactly what you say. TipRanks takes all of a Seeking Alpha contributor's recommendations and then compiles it into like when this person recommended what, and then builds a track record based off that.
Okay, very, very, very interesting. So I know that a lot of people in investment banking, for example, would like to go into private equity because there are many benefits. Is there a sector where people in asset management would like to go to, or is asset management the ultimate goal?
So I would say that it really is a personal preference.
What did you see from your past experience?
Sure. Could you ask your question one more time just so that I understand?
Yeah. So I heard from people in investment banking that a lot of people there would like to go into private equity, some because they see higher salaries or something else. Is there a sector in asset management? Is there something like that? Let's say people that from asset management want to go in private equity or some other sectors, let's say?
Okay, I understand your question. So first of all, investment banking is about deal making, M&A, restructuring.
Okay.
Private equity deals with the private markets,
Okay.
taking a public company back to private, right?
Yeah.
Or buying out a private company and leveraging it to be resold later. Asset management is typically about public company, stock selection, equity research. So they're very different businesses. And I
Okay.
would say that uh, like it depends on what you want to do. If you want to make a career out of reputation, out of your relationships, private equity and investment banking is a better fit. If you
Okay.
want to make a career out of your insights on where the economy is going, whether a company can turn around and
Okay.
have the stock price reflect your thinking, that's where asset management is more appropriate. So I wouldn't describe like private equity as an end goal or asset management as an end goal or investment banking as an end goal. I would think of these as three separate businesses. And it just happens that investment banking is a strong foundation for private equity because of all the workflow that you deal with, right?
Okay.
But it's not that private equity is an end goal, or it's not that asset management is an end goal. It's really about how do you want your talent to be utilized? Do you want it to be about um, like relationships and buying companies out and reselling them at multiples, which is very relationship oriented and
Okay.
filmmaking oriented, or do you want your legacy to be much more about I see the potential of this company and you buy in before other people do, right? That's much more about asset management.
Okay. Okay. So probably if you are good at building relations, you're probably better off with investment banking and private equity rather than in asset management, right?
I would say so because asset management is much more about your stock picks and
Okay.
you are correct about the economy or not.
Okay. 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 Very, very insightful. Um, so another thing that I I've I have taken a look in the last few months is alternative data. I have seen some videos on CNBC, let's say, for example, CNBC and Bloomberg, saying that many hedge funds, in order to seek alpha, are looking for alternative data providers in order to have more insight. Some are buying satellite data from companies like Orbital Insight and so on. So, are asset management companies investing, buying other alternative data providers, or they're just sticking to Bloomberg or Thomson Reuters and so on?
So I don't have the answer to that question because I don't know, but I would assume that to succeed in asset management, you need as much information as possible. So I'll make some assumptions and I would say that they probably are investing in these areas, but because I don't know for sure, that's my official answer. I don't know, but I would assume that they do.
Okay, okay, okay. Um, so since you cover mainly tech, what are the trends that you see in the market right now, and what are the companies that you're most bullish about?
Sure. So when it comes to technology, we have to know that like as our economy continues to evolve, technology will only continue to become more powerful, and we will rely on technology like even more going forward. So what that means is the positioning that FANG has in the marketplace, big tech, semiconductors, which power all of like our computing going forward. These are the secular kind of winners that will continue to make great kind of like progress, like as our economy evolves to become even more digital than it has already. So in terms of like what I'm really bullish on, I'm going to talk about industries that I think are really promising. I think big tech is really promising. FANG continues to dominate. I think semiconductors are also a really powerful way to ride the trend of the 21st century. Now, the thing is, if we look at like the pricing of stocks in the semiconductor industry or big tech, a lot of those shares have already reflected a lot of future optimism, right? So
Okay.
I say this coming from a perspective that I was in a lot of these companies early, and I've already, for example, like made a lot of like paper profits, okay, on these companies. And so, of course, I'm bullish on them because I'm sitting on a huge margin of safety. But for anyone who is new to investing, who's thinking about investing today, these industries continue to be very promising, but you have to be on the lookout for a couple things, because just like other areas of the economy, tech is specifically very sensitive to interest rates, and any differences in the outlook on inflation and interest rates could disproportionately impact equity prices in tech far more severely than in stocks of other industries. So I would say that I like these industries, big tech, semiconductors, right? But getting in today does represent, for example, like requiring a longer time frame. The way I think about it works like this: if you are getting in stock prices at very high levels, if you're in a promising industry, you will most likely like make a return on your capital. The problem is when you get in at a high price, you have to extend your time frame so that you have a margin of safety. Because if you get in at a high price and your time frame is short, there's a very good chance that you could lose money if you're not patient about it. So the higher prices that you get into these promising industries, the longer your time frame has to be to ensure that you can ride out the kind of like promise that these industries will have for the future.
Okay. Since we're talking tech and new things, there are new companies, of course, going public. Do you usually invest in IPOs? And if you don't, why? Why?
So I typically don't invest in IPOs. Most of my portfolio, and if we do a second interview in the future, I can
Okay.
do, for example, like an analysis of what kind of companies I hold in my portfolio personally,
Okay.
like how I'm positioned. Typically in my portfolio, I am buying companies that have significantly larger market caps. I typically focus on large cap growth. I
Okay.
focus as much on mid cap and I don't focus as much on small cap. I understand that small cap and mid cap have the potential for higher returns, but based on where I am in life, I don't want to necessarily take that kind of risk. For me, large cap growth is the returns from there is more than plenty, right? So,
Okay.
I don't focus on IPOs because think about it this way: when there's an IPO, there's a lot of hot opinions
Mhm.
taking place for that specific company right off the bat. And because there's a lot of hot opinions, think about it this way: like a part of investing is emotional. Emotions can get hot and emotions can get cool. And what that means is there's going to be significant volatility of a stock that just IPO'd. And therefore, in my opinion, the first several months of a company that IPO'd, it's still in price discovery.
Okay.
It, it's still in price discovery. It hasn't really found its equilibrium yet. And what that means is in the first several months, unfortunately, you have to rely a lot more on technical analysis. And could you succeed in trading IPOs, companies with technical analysis? I'm sure you could, but that's not my area of expertise.
Okay.
My,
And probably the investment banks that issue the stocks have more insight than the regular investors. That's also an issue that you don't have much information, probably.
exactly. So not only are we dealing with information asymmetry, we're also dealing with the fact that fundamental analysis doesn't work in the first several months for a company after an IPO. Now, of course, that's my opinion, and I'm
Yeah.
sure the audience might have a different opinion. But what I have seen is that it's very difficult to trade a company's IPO based on fundamental analysis. It doesn't work. DCFs, you can use comps analysis. You can do all the fundamental analysis you want. right after a company IPOs, it will not follow that kind of analysis. Doesn't work.
Okay, okay. So in the last few months, we have seen many reports about working in the finance industry, and one of the reports that stood out in the public was the report made by Goldman Sachs analysts about their working experience, the working environment, and the hours they have to work. So, what from your personal perspective, and maybe from what you heard from other people, which part of the industry has the best work-life balance?
Okay, so work life. So first of all, before I answer that question, I want to say that if you want to succeed in any industry that you aspire to do well in, work-life balance is very difficult. So I want to just preface my answer by saying that, because if you want to be successful, it is very difficult to have work-life balance. You have to spend a lot of time on work, and therefore the balance becomes tilted towards
Yeah.
work. If you want to become an expert, you have to spend a lot of time in that area. That said, different industries have different demands. And because investment banking is client driven, the work life balance there is naturally more difficult. Whereas in asset management and in investment management, think about the stock market being in the USA open from 9:30 to 4 p.m. And in Europe, it's the same kind of like time structure. There's an
Yeah.
opening, there's a close, right? And so you have to do research before and after the close, but the actual work hours is the time that the stock exchange is open. So for that reason, asset management's work-life balance tends to be more structured than investment banking and private equity. I don't want to say it's more lenient, it's more structured. And work-life balance is a function of structure. People feel like they don't necessarily have work-life balance when there's no structure. But when there is structure, that balance is more is more in tune.
Okay. And um, did you ever consider getting into consulting, and how difficult is it to get into, let's say, a McKinsey, Boston Consulting Group, or compared to asset management or investment banking? From what you heard and what you know, which industry is more difficult to get in?
That's a really great question, and I can answer this with mathematics.
Okay.
So investment banking as an industry size is multiples of the consulting industry, right?
Okay.
So if we think about the revenue that McKinsey brings in, it's it's very, very small compared to the revenue of an investment bank. So because of that, consulting is naturally a smaller industry, and therefore they hire fewer people. And
Okay.
and because they hire fewer people, naturally it is more difficult to get in, because we think about the demand of students that want to get in, or the demand of professionals that want to get in, compared to the supply of jobs available, right? So from a mathematical perspective, it is more difficult to enter management consulting at the elite tiers like MBB, McKinsey, Bain, and Boston Consulting Group.
Yeah.
But that doesn't mean that it's easy to get into investment banking either. All
Yeah.
all of the processes to get into investment banking, private equity, asset management, they're all very rigorous. It's just that there's more opportunity there. There's more
Okay.
openings. So to answer your question, I would say that it is harder, only because of the function of size, and also because consulting is, they're looking for a very specific kind of profile that not a lot of people have.
Okay. Another question that I have, and I'm curious about, is there a straight path toward, is there a straight path for venture capital? Let's say, um, in asset management, there's the CFA that helps a lot to get into asset management. Is there a more straight path to venture capital, or you just need to have great experience and a great CV?
That's a really another great question, and I want to answer this in two parts. So the first part is, number one, what is venture capital? Venture capital is investing resources in a way where you hope for a 10x winner out of the many kind of companies that you invest in, right?
Yeah.
In order to become a VC, I think there are two primary ways. The first is to become like an entrepreneur and have sold out to become a really big exit. Now, outside of YouTube and Seeking Alpha, I'm a small business owner where
Okay.
I've helped a lot of people, and I continue to help a lot of people on selective admissions in the USA and standardized testing. Right. That's my business outside of YouTube and Seeking Alpha. And I don't, for example, go for the VC funding or the angel investment route because I focus on small business. I focus on cash flow in, cash flow out. My business model is very simple, to be honest.
Yeah.
But if you want to become a VC, you need to have sold your startup to, for example, like for a big exit. And in that case, founders who are lucky enough to be in that kind of position, they now can be, for example, their own angel investor, which is in my mind a small VC, right? So
Okay.
if you want to enter that route, you either one, become a very successful, generally tech founder, startup founder, or number two, network your way into venture capital, which is a very small and close-knit community. So in my opinion, getting into venture capital requires, maybe I shouldn't use the word requires, but it would be very helpful if you had an elite MBA.
Okay, but in that case, is it better to have? Would you say is that better to have a finance background or a tech background?
To be honest, I don't think it really matters.
Okay.
I think venture capital is about selecting the right founder, selecting the right company, and
Yeah.
regardless of major, it's about insight and being able to see kind of the future.
Yeah.
And you don't necessarily need a finance degree to do that.
Okay. Okay.
I mean, I studied finance, and obviously, like I understand the value of a finance degree, but a lot of successful venture capitalists, they have a background in liberal arts, they have a background in philosophy, psychology. As long as you can pick the right founders, pick the right companies, see the future, that's the most important part. It's about the end outcome.
Okay. So one of the last things that I want to ask you is, what is like to be a business owner? What you do, what your company does, and what are the expertise that you provide to your customers?
Sure. So let me tell you like how I fell into like this business. So in the USA, to enter colleges, well, today it's semi-test optional. You have to take an entrance exam called the SAT.
Yeah.
And in Europe, I don't know if there's standardized testing, but I think like in England, it's the A-level exams.
Okay.
Right. So in the USA, you have to take an exam called the SAT to gain entrance into like US colleges. And so my small business called Tigerway, we help we're an online education program now where we help lots of students through like a large Zoom class, like understand how to really grow massively on the SAT. And we do that
Okay.
teaching critical thinking. So all of the things that we've talked about up until this interview, all the insights that I've shared, it's about thinking big picture. And I help the teenage market understand critical thinking and apply math and English in real life applications. So for instance, what I do in the program is I help people like navigate math and English by knowing the real life skills. So in English, as you know, like it's not just about good writing and knowing how to answer multiple choice questions on reading comprehension. It's about mastering language so that you can influence others. It's about mastering language so that when other people listen to you, they respect what you have to say, right?
Okay.
They can tell that you speak from a perspective of insight. And so I teach
Yeah.
that. Like when I help people grow their English scores, I also help them grow their English abilities. Same thing in math. Like I teach them mathematics, but I also show them how to build models on Excel. That way they can see the problem represented in a real life situation, so that it's not just academic. Because truth be told, you and I probably would agree that academics for most teens is not the most exciting. So we have to make it as powerful and as interesting as possible. And then with that, people's scores grow. They have the insights to like have an advantage in the admissions process, and that's what we do here, like in my program outside of Tigerway. And the reason I do YouTube and the reason I do Seeking Alpha is this: my students, they are with me when they're in high school. After they finish the SAT, they don't need to take the SAT anymore. They don't need to go through like strategizing for college anymore. That's where investing becomes important. That's where my YouTube channel and Seeking Alpha comes into play, because it adds value for them as they progress for the rest of their journey. So here in the US, people come to me to get ready for college. Once they're done with college, they consume my content on Seeking Alpha and YouTube to benefit their well-being going forward.
Okay. Very, very insightful. So another one last thing that I want to ask you is what you think about ESG. Some people say that is here to stay. Some people think that is a bubble. Some people think that companies that are denied ESG capital have more value. What is your take on that?
My take on it is that ESG is definitely here to stay. There are departments dedicated to ESG. There are investment strategies fully dedicated to ESG. It's absolutely here to stay. Funny thing I want to share is the SAT exam. Did you know that on the SAT exam, on the reading section, the College Board makes a very powerful effort to, like most of the time, include one passage on environmental science?
Okay.
And the College Board knows that because environmental science is the future of preserving the earth, right? So if the College Board is educating millions of its test takers that the environment is very important, ESG is here to stay, right? So I don't think it's a bubble. I think it's here to stay, and I think that companies who apply ESG correct will be given a premium.
Okay, great. So, are there any sort of way to track the ESG improvements made by the companies, or we just have to rely on statements by the companies themselves right now?
So I'm sure there's a really sophisticated way to track ESG companies, but because I don't work in that space, I don't have a specific answer. So what I can assume is there's definitely a sophisticated tracking method, because in asset management, we have some of the smartest people in this industry working together to have these solutions. So if you have a question, they probably have the answer. But it's just that I can't confirm for you because I don't work in that space.
Okay, it's fine. So I'm okay with this interview. I think I'm done with the questions. If you want to say something, ask something, go ahead.
Sure. So I mean, thank you for having me for your interview, and hopefully this adds a lot of value to your community and your audience, gives them clarity on multiple areas like career, understanding the markets a little bit more, and understanding like certain views related to various questions.
Topics that we covered. Yeah. So this is it for today. Thank you, Larry, for being with us, and hopefully we'll get the chance to collaborate more in the future.
Sure.
So this is it for Hustle Hub. See you the next time.
Thank you.